Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you, as every week, my weekly update for week 3 of 2022. And this week was really interesting on the markets. The market just crashed down the whole week, and then yesterday there was a kind of a sell-off. At least it looked like that, or at least the newspapers or all the news and television or even here on YouTube look like there is a big crash. And in this video I will show you how this impacts my real money portfolio and what I did last week. But before we start, don't forget to subscribe, ring the notification bell to never miss another video. And then you will get every weekend my weekly update on my real money portfolio with a full insight to my portfolio. And every Tuesday or Wednesday, a video with analysis of a stock, a full analysis of a stock where I go through the business model, calculate the intrinsic value, and tell you what I think about this company. And if you like this free content and if you find any value in that, then please support me via PayPal Investing for Generation. Let's jump into the topics. And first of all, I will start with an overview over the market at all. So the S&P 500 lost around 8% since the start of 2022. That's quite a lot, especially when you know that in the last decade it just went up and up and up and up, and so every time when the market drops some percentages it really feels like a crash, but at the end it's only 8%. Of course, when we look at the Nasdaq, it's already 12.5% since the start of 2022, so a little bit more. So really we are here in a correction mode. And then, of course, when we look at single stocks and especially the hype stocks from 2021, then we see some of them really got destroyed. When we look here, Peloton, Virgin Galactic, Robinhood, you find especially the companies where a lot of YouTubers made a lot of videos and tell you why these stocks will reach the moon and why they are and why this is good investments. Here you see just the reality, and here you also see the reason why I very seldom invest in hype stocks like that. Just a few of them will really make it. Then it's just like a lottery, you just have to pick the right one. And here, for example, for Zoom, one of the big winner in the pandemic situation, I made a video like a year ago and also told you at these times why it's a terrible investment at this prices a year ago, and now it's down 66%, and it's almost just the same with all of these companies. So here on my channel, in my portfolio, I'll look for profitable businesses, very stable businesses, and then just invest for the long term, try to find reasonable prices for good businesses. That's all. Not a lot of speculation, maybe sometimes boring, but that's what it is, and I'm quite happy with that. And so it's panic time. When we look at YouTube, you find a lot of videos in the last week, and everything is about stock crash and what will be next and what to do. And this seems like there is a lot of panic. As I said, the S&P 500 is just down 8%. So yeah, it's a bit, but it's not really time to panic. Especially when we look at the long-term chart over the last 5 years, then you see this dip lately is almost nothing. Really, nothing happened. And so just calm down and look for good businesses to invest for the long term, and maybe use this chance because also some really good businesses are beaten down, like it is always when the market is in correction or crash mode. And then just to put this in perspective, this market, even after this 8% correction, still looks very expensive. The Shiller PE ratio is currently still at 36, which is historical high. Only in the dot-com bubble in the 2000s it was higher. It's even higher than in 1929 when there was the Great Depression. Still very high valuations. For example, the median for the Shiller PE ratio is 15, or in other words, even if this market drops another 50%, we are still only at the median. And so, just to put this in perspective. And then last but not least, for this overview, take a look at the Fear and Greed Index. And here we see that just a week ago, people was very positive, very greedy, and now it changes to fear. And the best time to buy, there is extreme fear in the market. We are not there yet. This index is really interesting and you should take a look from time to time because it's a great indicator. To say it very simple, when there is extreme greed in the market, then it's a good time to sell. The same on the other side, when there's extreme fear, then really everything gets beaten down and the people just panically leave the market, and then it's time to buy. But of course, as I tried to explain, there is a lot of room for free falling in the stock market. But then, of course, I want to go back to Charlie Munger, one of the wisest men in this world, and just want to remind you that it's impossible to time the market. It's in the nature of the stock markets to go way down from time to time. There's no system to avoid bad markets. You can't do it unless you try to time the market, which is a seriously dumb thing to do. Conservative investing with steady savings without expecting miracles is the way to go. So then take a look at my transactions of last week. And I used this little drop just to add some stocks of my current positions. And first of all, I added to my T. Rowe Price position. I bought in last week, and this week on January 18, I bought 7 more shares for $170.61. And then yesterday on January 21st, I bought 4 more shares for $160.73. And then later yesterday, I bought another 6 shares for $160.02. And so overall, now I have 35 shares of T. Rowe Price Group in my portfolio with an average purchase price of $174.18, and the whole position is down 8.32%. And as for every stock in my portfolio, I also made a deeper analysis of T. Rowe Price. This is quite a while ago, like a year ago, I made a video about. You find this on my channel. Check this out, and as I said, you find deeper analysis to all of these companies on my channel. Then I added to Meta or Facebook. Also yesterday I added 4 more shares for $305.99, and now currently I own 44 shares of Facebook with an average purchase price of $295.48. And this is the biggest position in my portfolio and is up right now 6.46%. And I will hold for the long term. As for every stock here, all of them are just great businesses in my view, very profitable businesses. And so there's no need to worry. Then I added also to PayPal. Also yesterday, or was like a weekend shopping, I added 7 more shares for $164.57, and so I own now 40 shares of PayPal with an average purchase price of $180.95, and so I'm down with this position 9.62%. Then I added also 18 more shares of Heidelberg Cement, my German company in this portfolio. And now I own 60 shares of Heidelberg Cement, a very good profitable business, very solid business, a base investment with a good dividend. And so I own now 60 shares of Heidelberg Cement, and the whole position is down 2.83%. Is one of my newest positions in this portfolio. And last but not least, I also added to my position in Snap-on, also very good, very profitable business, very good dividend payer as well. And I bought yesterday 4 more shares for $205.97. And so overall, I own 32 shares of Snap-on now with an average purchase price of $215.03. And so I'm down 3.99% right now. Last week there was no dividends in my portfolio, so nothing to tell you here. And then just go to the overview over my portfolio. And first of all, start with the pie of my portfolio, and then you see there is still, even after all this adding, there's still a lot of cash left in my portfolio, still 25% of cash. The reason for that I just explained earlier. I think the market is still overvalued. There's a lot of room to fall. This not necessarily mean that the market will crash. It's just like even now, after the correction, it's difficult to find good businesses for reasonable prices with a big margin of safety. And then, of course, I also like to diversify, and so I don't want to put all my eggs in one basket. That's maybe a mistake, but yeah, I'm not a super investor, and so I have to diversify. And then you see Facebook or Meta, as I said, is my biggest position in my portfolio with 7.81%, followed by Intel, MI Homes, Tencent, Alibaba, and so on. And so I go with a big chunk of cash into the future, and yeah, just hopefully I can deploy that also in the foreseeing future, because of course I wanted to be invested 100% if I can find good chances with a good risk reward ratio. When we look at the performance of my stocks, I want to start today with the performance in 2022, so the time when the market took the dip. And we see that Baidu, the Chinese stock in my portfolio, performed really good. Also Alibaba positive in 2022, and also the third Chinese stock, Tencent, is in the plus in 2022. And so my Chinese stocks, which overall are very much in the minus, especially Alibaba and Tencent, stabilize my portfolio right now. And then of course the Progressive, Allstate, Coca-Cola, just basis investments which stabilize my whole portfolio. And then at the end of these performers, we see MI Homes, the home builder, fall 16% since the start of the year. Reason for that, of course, is a fear of the rising interest rates and the impact of the business of the home builder. I stick with MI Homes because I think it's a great business with a great management. So I don't worry too much about that. And then at the end of this list, we also see PayPal, JP Morgan, which brought last week not so good numbers for their quarter, but still very great business. Nothing to worry about. And then when we look at the performance of every single stock since the start of the 2nd of December 2019, so overall, then we see that the Bank of Nova Scotia or Scotiabank is the best performing stock in my portfolio with 91%, followed by Coca-Cola, Berkshire Hathaway, JP Morgan, and so on. And at the end of the list, you find Alibaba still down 36.44%, MI Homes, Tencent, and so on. But as I said, I'm quite happy to be an owner of all of these businesses, because all of these businesses have one thing in common. They are very, very profitable. They have a good market position. And so there is nothing much to worry on the business side, and the rest is just a stock price. So every time you have to divide that also in your mind. I invest in businesses, and so as long the businesses are very good, very profitable, there is nothing to worry. And if the stock price fall, then even time to add more to my positions, as long as the business is still good. Of course, when the fundamentals of the business change, then you have to review that. But as long as the business is good, the rest is just the stock price. The goal is just to find the irrationalities of the stock market. Then also take a look at my closed trades already since the start of the 2nd of December 2019 when I opened this portfolio, and then you see I had some very good trades with Imperial Oil, Caterpillar, Walt Disney, Stamps.com and so on. And so overall I really have a good performance. Just take a look at that. And first of all, take a look at the performance in 2022, and then you see, yeah, also my portfolio lost 2.58% since the start of the year, but this is still an outperformance of over 5% compared to the S&P 500, and still an outperformance also of around 3% to the Dow Jones Industrial Average. And when we look at the performance overall since the start of this portfolio in 2019, then we see that my portfolio of course also got a hit lately, but still is up 56.15%, which is an outperformance to the S&P 500 of 15% and to the Dow Jones of around 33%. So quite good outperformance. And as I said before, my goal is just to go on like that, look for good businesses for reasonable prices, and then invest for the long term. If you follow me for a while, you know right now I analyze a lot of small cap businesses. I go through a list of around 2,000 small cap businesses. Made also some videos about very interesting small cap businesses last week and also the week before. Check this out. There are very good hidden champions which look pretty cheap, and if the market drops maybe a little bit more, it's very possible that I will buy the one or the other. And then next week, the plan is to make a video about the big players in the market, Apple, Amazon, Google, and Netflix. Even they dropped a little bit, and Netflix, of course, a lot, as I said before, but also Amazon, for example, come to a range which seems interesting, and so I will take a look at these big players and review them. I want to see if there's maybe also a chance to buy into this great companies. So that's it for today. Thanks for watching. If you liked the video, please give me a big thumbs up. This helps the YouTube algorithm a lot. Give me your thoughts in the comment section. I'm very happy just to interact with you and know your mindset, your thoughts, also about my portfolio, of course. And as I said before, if you like to support me, if you get any value of these free videos, then support me on PayPal Investing for Generations. So that's it for today. See you the next time. Take care. Bye bye.